Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the July 9th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in. Phone lines are open, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started. On Thursday, terrific Thursday, of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow off 326 points, 1.25% to the downside. S&P 23 points. That's about 0.75%. The NASDAQ went up almost 0.5% or 42 points. Russell's up 23. So gold is back $15. Silver down 20 cents. Light sweet crude is up $1. So we got plenty to look at. Of course, I want to look at what you want to look at. Let's look at the general markets out here. Get a feel for what they're communicating to you and I at just 1 o'clock in the afternoon. When we have markets like this that sell off intraday, what I like to do is understand what's going on in the strong indice, what's going on in the weak indice. So let's start with the weak indice. The weak indice out here is the Russell 2000. And one of the easiest places to start is what is price doing in relationship to its profiles. Remember, there's an expression started here by Obi-Wan Kenobi out here. It's a great expression. I give him a little royalty every time I use it. So Kurt Ching out here. And you know what that is, isn't it? If we take a look at the Russell 2000, very right-hand panel of our chart out here, what do we know that price has done so far today? What has it moved down and tested today? Yes, there's some trend lines out there. If I turn those off, what has it moved down and tested and rejected? The bottom of its daily profile. That's 1379.58. Yes, it poked its head down below that. The actual low so far in the Russell 2000 equity future contract was 1376 versus 1379. Does that matter? No, it does not. It matters about the end of the day close. But if you can't bust them down, guess what price will try to do? Bust them to the upside. Now, if it's going to bust them to the upside or try to bust them to the upside, then it's going to certainly need some help from its friends. Family and friends out there. And the friend that it really needs, quite frankly, is the NASDAQ, right? So we know what the weak indice has done so far today. All it's done is tested support. Just in case that wasn't clear, it's tested support, which has held. If we go take a look at the NASDAQ 100, we'll just start with the daily time frame chart out here. Well, I'm looking at the NQ, so just to be clear on that. If we take a look at it, what it did was it moved down and it tested Stevie's green line. Sacre bleu. How does it do that out there? So now what we have is the strong dog, the NQ, moved down and tested a key level of support, and it held. And the Russell 2000, guess what? Tested a key level of support and held. Now, look, I have no control of what the market's going to do over the next 3 hours or so. And if price closes below those levels, well, then we have a different message. But I'm here to deliver to you or to communicate to you or narrate to you what the charts are communicating to you and I, which is as of right now, which is 1:10 in the afternoon. So that's what's going on there. Now, the Dow is a weak indice out here, not as weak as the Russell. The Dow just simply getting down to test one of its trend lines out there. But what we can also look at inside the Dow, it also, and I'm going to do this on the 2-hour time frame chart. This, what it did was it created a potential for a Gartley buy pattern on its 2-hour time frame chart. Now, this 2-hour candle session completes at 2 p.m. It's 1:11. No idea if this will generate a bullish reversal candle or not, but it could. But you can see the 1 to 1 A to B equals CD. If we did get a bullish reversal candle while this pattern is in effect, then you've got a Gartley buy pattern, which could lead to 5 different potential outcomes. The first 3 being just retracements of the A to D move out here. But until we get that bullish reversal candle, we won't. Now, if we go to the short-term time frame charts, it would also have the same A to B equals CD pattern out there. And on the short-term time frame chart, so let's go take a look at the Dow. Let's pull over the 30-minute time frame chart just to see if it did generate a bullish reversal candle. And most certainly it did. There's your bull sash. Now, in this case here, on the 30-minute time frame chart, we can see that price is dealing with the top of its 30-minute profile, right around where it's trading right now. And then above that at 25,675 or thereabouts, you've got Stevie's red line. And if price is able to close above the red line on a 30-minute time frame, that tells you about an additional move higher. Now, the question should be, okay, Stevie, I get all of that, but additional move higher to where? That's a great question. So to answer that question, what we're going to do here is we're going to pull over our opening range charts and we're going to stick with the 30-minute time frame out here. See how we just do this piece by piece by piece. And you'll also notice wave number 7, letter G on the 30-minute time frame charts out here that formed as it was making its bottom. Now, with regard to its potential for a rally higher, boy, it's got a long way to go before it can get to its opening range. That's at the 25,888 level out there. So that would be a big move. Now, is it possible that we're going to see the equity futures contracts, the ES, the YM, and the Russell 2000 continue their rally? Well, if that's going to happen, where they need the help from is inside the NASDAQ. So now let's come back over to the NASDAQ. Here inside the NASDAQ, we already took a look at what it did as far as support using the daily time frame chart, just getting back, testing Stevie's green line out here. Price right now is above the U.S. opening range. That's priced at 10,691. Now, granted, the 30-minute bar is not complete yet. It won't complete until 1:30. It's only 1:13. But if price does close above 10,691, well, in essence, it's set up in kind of breakout mode for the afternoon. As long as price stays above 10,691.25 to be exact out there, that is its message. So I hope that gives you a fairly decent feel for what the markets did, how to go ahead and assess the markets to get a feel for that. There's a question out here. Ruby says, did you say the rally on the Russell 2000? Yeah, well, what I'm talking about here, Ruby, is first, what we know about the Russell 2000. Let me just expand the chart out a bit. That way we're not looking at anything else. Let me turn off my trend lines out here, and that way we're just looking at the chart. And as we look at the chart out here, let's get rid of these trend lines. What you should notice here is all price did in the weakest index, the Russell 2000, was got down and tested support, which held. And that's at 1379.58. So, Ruby, if you can't bust them down, price will try to bust them up. And if that's the case, we needed to go take a look at the strong dog, the NQ, to see if it had broken any key levels of support. And what we found out was it had not. All it did was tested Stevie's green line. These markets are not ready to crack yet, folks. At least not at 1:14 in the afternoon. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Hey, guys in the production room, I'm just getting an email here from a listener. Says, I'm listening to the charts, watching the show, and the charts are not showing up on the right side of the screen. So I think you've got to just, do your magic out there and get those things centered, I think, posted through the Skype process out there. So, Steve, thanks for bringing that to our attention. The guys in the production room will go ahead and get that fixed. We've got another question or email that came in. Let's read this. This is one from LC Leonardo out here. And he goes out, hey, Steve, I would be interested in an opinion. That's always trouble. But interested in an opinion on a general issue. Central banks print trillion after trillion. Governments rack up trillion after trillion of debt and deficit, and nobody bats an eyelid. Well, you're batting an eyelid out here, so not nobody. But how much additional money printing and debt accumulation do you think is required before the Ponzi nature of our unsound monetary system is finally exposed? Woo! 0 trillion, 50 trillion, $500 trillion. Leonardo, you're asking me a question that obviously can't be answered. But what I can share with you, and what I would like to correct out here, is a lot of people actually believe that the thought process about the Fed printing money creates inflation. So I don't know what's really behind the total question there, Leonardo, although you did give me a mouthful. But the point I think you're trying to make is that printing money is bad. Would that be correct? No, of course, Leonardo's not on the other side of this phone, so he can't answer that. So this is just Steve-O having a conversation with myself out there. Hey, I understand. I know all the comments there. But the reality is Printing money is not a bad thing. Printing money, listen to this, printing money is not a bad thing when you are the reserve currency of the world. And that's what you've got to take into account. And you must separate our Federal Reserve from other Federal Reserves that are out there. We are the king dog right now. There will be a time period where we are no longer the king dog, but right now we are. And look, folks, all you have to do is go back through thousands of years of history, and you will see no matter what currency has ever been used, no matter whatever people decide to use as currencies, and the reserve currency that might be established, you always see debasement of those currencies. So this is nothing new, what is going on here. It happens thousands of years. But here's the deal. Because of all the printing that's been out there, and I know I get the emails from people that say, Steve, you must not go to the grocery store and buy milk out there. Don't hit me up with those type of inflation things. That's a different inflation scenario. That could be demand and supply issues or other elements there. And so what we have learned, because they've been printing, as you say here, Leonardo, you've pointed this out since 2008 with regard to the balance sheet growing on the Federal Reserve. And has that created inflation? No, it has not created inflation. Printing money is not what creates inflation. How do I know that? It's not the Federal Reserve that is the only thing in the United States or around the globe that is printing money. You, Leonardo, well, maybe not you, but I'm kind of using you as just a general icon out there. But those of you who have purchased new homes are creating currency, printing money in this market all the time, all day long. Leonardo, maybe So I've got children. I've got three, they're adult children out there, and they've got good jobs, and they're out buying a real estate. So, they buy a $500,000 home, put down 5% on that. So you got $500,000, you put down 25 grand, and you've got to finance the 475, right? Well, that 475 to that new home seller out there, whoever it might be, that money didn't exist before that home was purchased. And that is putting money into the marketplace. Now, that's just residential real estate. It's the same thing, Leonardo. Maybe you've got this successful business and you decide, you know what, I'm going to go buy a building. And you've got the credit worthiness to go buy this $10 million building with 10% down. That $9 million, you just printed money if you do that. Now, I don't know what. I think we sell around the $750,000 or around $750,000 or so new homes a year. I don't know what the median price is, $300,000-400,000, something like that. I don't know what the total new mortgages are that are out there. But the printing of money, it's not just a Federal Reserve thing out here. What creates inflation, and we've seen this just over the last several years out here, whether it's Venezuela, whether it's Turkey, what creates inflation is a lack of confidence in government or the money, the currency that we decide to use. Look, the only currency out here that never gets adjusted, inflation or what have you, the only currency, and each of us have this currency, it's called our GDP. It's called our worth that we provide for our services that we provide and what people are willing to pay, whether it's in dollars or it's in gold or it's in silver or it's in tulips or whatever it might be out there. So I think that the focus is and the belief is that the Fed is just printing money and everything's going to go to hell in a handbasket. The reality is what the Fed should be doing is they should be printing money to cover the deficits. What they shouldn't be doing is accumulating more debt. It's never going to be paid back anyways. So why are we going ahead and paying interest, which is more than half of the debt, right? The way that this should have been done or should be done is if we do, especially when you're the reserve currency of the world, you put together your budget, you stay within your whatever that budget is. If you've got a deficit and it's $1 trillion, you go ahead and print that money and then you don't have that debt issue. You kind of see what I mean, Leonardo? So we could spend a lot of time talking about this stuff. And I do like talking about this stuff. But what I also like doing, much like we did yesterday, is also maybe getting a better or a different perspective than what folks have out there. So I know I didn't really answer your question, Leonardo, but I did the best that I possibly could. So let me see. I've got another question that's out here, Steve. This is more of a personal thing, so versus versus for the show. So I'll get back to that. Okay, so I don't have any other questions in the queue just yet. Let's go take a look at Goldilocks, because I'm sure somebody's got questions about gold. And let's go see what gold is doing. So when gold pulled back today, where do we want to? So, well, here's gold. Here's gold in priced in all of the currencies. Well, all the major currencies out here. You've got gold expressed in euros, yen, and pound sterling. We took a look at this yesterday. We took a look at, hey, was gold breaking out? We said it's breaking out in U.S. dollars. Because it was above its consolidation. And we'll go back and we'll take a look at that. But we said in order for it to really get legs, gold has to look like it's breaking out on every trader's desk around the globe. That includes the folks that are over trading in euros and those that are trading in pounds. When it came to yen, the answer was, yeah, it looked like it had broken out. And we could see the descending trend line that basically was rejected yesterday in pound sterling. With regard to the pullback here in gold, right now I don't see anything that is broken. But let's go take a look at my other charts out here. Let's pull up. Give me one moment out here. Let's pull up my other daily time frame chart. On this daily time frame chart, you will see the consolidation. You'll see the clear break of the consolidation, and all that gold did today. Think of it like this. John in the Tiger's Den, Z, I believe you took a long trade in gold out here. And what gold did today when it pulled back was just tested Stevie's green line, a test and rejection, much like we took a look at the NQ. And just like you went long gold here, that same tool, you could have also gone long the NQ. Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, let's stick with the gold out here because the day's not over. We know so far prices come down and has tested a key level of support. That's Stevie's green line. That's priced about 1801 out here. And if price did close below that level, 1801, then we would expect price to pull back and maybe test the top of the consolidation. We go look at the daily profiles and so forth, see if there's some level of support out there. So in order to get a feel for whether or not gold has actually turned around, we've got to go take a look at short-term time frame charts out here. And the short-term time frame that I like to use is a 30-minute chart. So we'll put over two 30-minute charts to help us answer that question, or at least identify the key levels to be watching to give us a signal whether or not gold's going to bounce from here, move higher, or maybe it's going to head lower, really retest Stevie's line again, or possibly close below it. And so to do that, we're looking at the 30-minute time frame chart out here. And right now we can see that at 1804.60, and we're trading at 1803.50 out here. That price is testing the TD9 breakout level. If we get two bar closes below 1804.60 on a 30-minute time frame, it would be suggesting to us the price would move down to 1782. That's the next level. Just simply one mathematical breakout level at a time. Now that's a 60-minute time frame. Let's see what's going on the hourly time frame. The hourly time frame for gold shows the price has got two different TD9 count highs out here that have identified the most two recent highs. Price is pulling back and testing its breakout level of support of 1804.60. Two close on hourly base below 1804.60 suggests 1780.40. So that's what's going on that time frame chart. Now, unlike the NASDAQ, when we took a look at its opening range, which price was trading above the top of the opening range, so that's bullish. That's like getting ahead of resistance. When you trade below the opening range, well, price can certainly continue lower unless you can find some type of bottom. All we've seen is gold testing levels of support. We don't see some type of bottoming pattern, not like I can draw in the A to B equals CD down like we did inside the Dow. Here is the opening range for the gold contract, and we can see the price is below all opening ranges at the 1770 level out here. So it has not given us a clear signal. Granted, it has tested a key level of support, but there's other levels of support on the intraday time frame where it hasn't given us the clear signal just yet. So we looked at those charts. You've written down those numbers for those of you that are trading gold or intraday out there to assist you with that trade. So I hope that helps you out. Is there anything else in gold? It's very interesting, or Stevie finds it interesting out here. This 1804.40 level, this little yellow horizontal line, that was resistance. Yesterday's high ran into resistance at the top of the weekly horizontal trading range of 1829.80 out there. So I find it very interesting. This is gold is trading up into a real strong level of resistance out there, and if it's really going to break out, what you will see, if it's really going to break out in dollars, you will see gold expressed in pound sterling close above this little descending trend line. And the same thing with regard to gold priced in euros out there. So hope that helps you out. What else should we look at? Let's go take a look at the spot volatility index. What is that doing? Well, or what did it do today? It traded up to a high of 31.48. That was right, 31.48. Which is still below the 50-day exponential moving average, which is 32.14. You look over on the right-hand side of the chart, and what we see now with the ES Mini, it's still trading above the top of its daily profile, which is somewhere just below 31.38 out here. So what you have is these two messages combined are saying I'm not ready to crack just yet. That's the message at 134. If we get a different set of circumstances in 2 minutes from now, then we'll take a look at that. But right now, spot volatility index is telling you there's still plenty of liquidity out there for the markets to move higher to sideways, even though the ES Mini is down 24 points right now. And price is above the top of its daily profile out there. Both of those are bullish conditions. The bearish conditions in the general market out here are really coming from the New York Stock Exchange. So as we switch over and take a look at the New York Stock Exchange, we will see that its advanced decline oscillator is below zero, the zero line out there, close to the extreme oversold level, which is minus 150 or minus 121. Now, in the New York Stock Exchange, when you see this nice little waterfall that we had here from early February, there are really two things that were going on at the same time, simultaneously, when markets began moving to the downside. Those two things were the advanced decline oscillator of the New York Stock Exchange was below the zero threshold level, and the spot volatility index was above the 50-day exponential moving average. That is your formula for success to the downside. And so I go back to Ruby. I go back to your question about, will these markets ever trade? They start trading lower and they continue to trade lower out here. What I really want you to visualize and have, and kind of like these little dials, they're either in your mind or they're on your screens, or you're paying attention to them and you're noting them, should be these things. Should be these things, Ruby. You should always want to understand, where is that spot volatility? Now, this is going to help you with regard to the S&P, but that's okay. Where's the spot volatility index trading in relationship to that 50-day exponential moving average? If it's above or below, it's providing you with a really important piece of information out there. Really important piece of information. This chart right here is extremely helpful because it's clear. It provides clarity to us. If we know that, or we believe that to be the case, and if you don't believe that to be the case, then what you have to do is you have to take issue with this chart out here, because this chart, the yellow and the green squares, rectangles, whatever objects they are time periods where that spot volatility is either above or below the 50-day exponential moving average. It doesn't give a rat's patootie, whatever patootie is, what the number of the spot volatility index is. It doesn't care whether it's 30, it's 20, it's 14, it's 50. It's just, where's the trading relationship to that 50-day exponential moving average? So this is what that tells you. That's why you can use that as the general rule. It is a great general rule out there. So, and when it's not, when you get that big flush to the downside, Ruby, like we had, did the spot volatility index ever get above the 50-day exponential moving average? No, it did not. It did not. And then at the same time out here, because I give you these market profiles, you at least can take a snapshot of this picture, or certainly if you're a newsletter subscriber, you're getting this each morning, sometimes in the evenings as well out there. And then you've got the numbers. Then you're just trading by the numbers. And at that stage, if you were short the Russell 2000 and you knew it was coming down, it was testing support at 1379, and the spot volatility index was not above the 50-day exponential moving average, it was generating a signal to you. The signal was, at least tighten up the stop, so to speak, out there. So utilize these tools here that we take a look at on a daily basis. I know that they will assist you with your trading, and it's especially important right now. Whereas Ruby, if that spot volatility index were above the 50-day exponential moving average and prices coming down to test that level of support, okay, now you're not sure who's going to win this game, but now it's clear delineation. You know what needs to happen, and the spot volatility index is saying sit tight. Go ahead and sit tight with that trade out there. And if price then is below the bottom of the daily profile, then you've got this change in trend signal. And in the case of the Russell 2000, likely at least a large A to B equals CD to the downside. So I just hope that helps each of you out there in really trying to piece together these markets. I won't be with you tomorrow. I'm going to be doing some traveling. I'm actually going to step on an airplane out there and spend some time with one of my daughters, and just hang out for the weekend. So I won't be able to do the show tomorrow, but I'll be back on Monday, and we've got more showtime here. So about to go to a hard break. Dow's off 319, S&P down 22, and we'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So one of our dinners wants to take a look at Nike. Ticker symbol here is NKE. We like to start out and take a look at a perspective of the daily, the weekly, and the monthly time frame, and specifically with regard to where they're trading in relationship to support and resistance of their TAS market profiles. The top of the profiles, those would be in red. That's where sellers reside. The bottoms are where the buyers reside. Those are green, and the bluish color is the center, and that's where both buyers and sellers believe there's fair value within inside that range. That's important. So here, the message from Nike is price is trading below the bottom of its daily profile. So generally speaking, bearish, directionally speaking is what I should say. If we take a look at the weekly chart, well, price is trading within the profile. So the next level of profile support for the weekly time frame is down to 86.33 to 81.94. We move over to the monthly time frame chart. What we can see here is the last 3 months, Nike has tried to break out. By breaking out, what I'm referring to is closing above the top of its bearish structured profile. So, and I don't know who asked me about Nike in the den, but if you're asking where is the significant resistance in Nike, you can look at this chart right here and you can see it specifically. You can see it. You know that on a closing basis, it's 100.13. What we also know is that really the next level of support on the way down, should Nike move lower, would be 94.65. Because that is going to be before we get to 86.33 on the weekly, 94.65 being the center of the monthly profile. Okay, so that helps us out here. Now, my black background charts, I don't have the tools that I've got on my white background charts out here. Why is that? Lots of reasons, but I won't go into it. If we take a look at the why'd you ask that question? Well, because I'm just talking to myself. Now, if we go out here and we take a look at Nike, what do we see? Do we see some type of topping pattern? Now, I can visually, on this set of white background charts, I don't have my A to B equals CD tool out here, but it does look like there may be an A to B equals CD pattern. I can't say for sure. We know that price is below Stevie's green line. Here, the real level of where Nike might be headed to is its breakout level, and that's 89.88. So if the question is on Nike, is it likely to drop? Well, it's below the daily profile and below Stevie's green line, so no reason to think otherwise right now. And your buy point on Nike could be where it broke out from, 89.88. That's what I would be looking at. Now, on the weekly time frame chart, what's the signal that we have out here? Price got up, tested its breakdown resistance level at 103.89. Its buy point would be Stevie's green line, 94.99. So you got 94.99 on the weekly as a potential buy point, and you've got 89.88. That's your range right now for the buy point. I like the 89 price point slightly better. On the monthly time frame chart, what does Stevie have here? Price is trading below Stevie's green line, just slightly out here, but that's good. Good from the standpoint. Well, it's good from the standpoint if you're looking to buy Nike. I don't know if that was the case or not. But this is suggesting that, price could also continue to move lower out there. So that's a take on Nike from the charts perspective out there, and I hope that helps you out. No other questions that I see. If there was another question inside the Tiger's Den, if you would, considering a short-term hedge on long-held shares. Okay. If there is something that you want me to take a look at, if you'd be kind enough to type that back in, that would be cool. Now, Ruby, I know Ruby, like me, she likes cocoa. In fact, I'm cuckoo for Cocoa Puffs. I don't know if Ruby is cuckoo. She's not cuckoo for Cocoa Puffs. I am, though. Why does Steve even bring that up? Well, I want to be able to offer a potential trade. And if we take a look at that, I know you like to trade cocoa out here. I believe you do. You're getting what looks like is going to be a TD9 count bottom today, with yesterday's low, bar number 8, being the low. I won't know till the end of the trading session, but you've got a tradable, buyable bottom based upon this pattern. Now, one way you can also take a look at it is you could be more conservative and wait for price to close above Stevie's red line, which is 2167. But it looks like you're going to get the TD9 count. It's valid bottoming pattern. And if price were to close above 2167, you should get a move to 2255 to 2278, the bottom or the center of that daily profile. So cocoa looks pretty good from a commodity perspective. What else looks good in the commodity sector as long as we're here? Well, you've got wheat. Wheat is broken out. Wheat has a change in trend signal as we speak today. As we look at the September contract here for wheat, you can see that price is above the 519 level. 519 was the TD9 count breakdown level. So wheat is looking mighty fine. What else do we have going on? I'm just looking through the commodity charts out here, see if there's anything worth noting. Corn looks like it may be setting up an A to B equals CD. Now, each of these charts here that we're looking at, just so you know, if you trade commodities like this, you want to understand what's going on in commodities. Each morning, these charts are included in the newsletter service out here. So to the extent that, and it's really helpful to understand support and resistance levels. Now, in the case of corn, we're looking at the December corn contract, and if price can close above 363, that is the top of its daily profile. You've got to run up to 381.50 to 387.50 area. That's the A to B equals CD, and that's the TD. That's the next TD9 count breakdown level. So corn is looking like it has some legs out there. What else does Stevie see? I don't see anything else out here. So those are the commodities. Again, no other requests that I see. Oh, let's see here. I take that back. We've got two questions. Hector writes in, and July 27 seasonal top. Have a good weekend. So I think Hector's really just referring to yesterday in our discussion about the seasonal pattern out there, and maybe that's the case. What I really wanted to do out here with regard to that slide. Let me see right here from beginning. There we go. This is our seasonal cycle, and the July 20. Well, Hector wrote July 27th. It's actually July 21st. But Hector, you and I, we're not going to be tied to that date. It's just that the normal seasonal pattern for the Dow is that it doesn't really top until about the third week in July. So Hector is right with regard to that next move to the downside out here. That may be, and that's going to be about almost 2 weeks from a couple of days ago, would be July 21st out there. So certainly so I guess the point that I really wanted to make with regard to the seasonal chart and what we were taking a look at yesterday, because I probably filtered this in somewhere along the line out there, is that what we're seeing taking place in the markets right now, when we understand the normal seasonal pattern, is what is going on right now in the markets. And that is really the important thing. Let's not get too tied up into that July 21st date. I would say to you, Hector, that if we got some type of clear signal inside the NQ, I would put that over the July 21st date. But this just helps us from a broader perspective understand what is taking place out there. So I hope that helps you out. We've got a request out here from, I'm not sure, MAR. We'll go with Marty. I'll go with Marty out here, although I could be really wrong on that. So we'll just not go with anything. But somebody's got a request out here for Harmony Gold. HMY is the ticker symbol. And so we'll put the charts up on the screen out here. It's trading above the daily, the weekly, and the monthly set of profiles. The question is, Harmony Gold has been a hot stock as of late. Where would you buy it since it's going down now? It's really just a slight pullback. But when we get back from this break, we'll pull over Stevie's other charts, try to figure out where there is a buy point on Harmony Gold. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at Harmony Gold out here, and this is the daily time frame chart. So what I want to do is this is forming right now a butterfly sell pattern as we speak. So I'm drawing in the A to B equals CD, and you can see that this has made the 1 to 1.272 A to B equals CD. Today's candle so far is a dark cloud cover, but I don't know what the candle formation is going to be come 4 p.m. But if it closes right around here at 550, you do have a bearish reversal candle. A butterfly pattern because it's an expansion of the swing points from the February 24th high down to the low on March the 19th out there. So it sets up a beautiful butterfly. So the question becomes on a butterfly pattern, where are areas where price can pull back to? Because the question is, hey, if this is going to pull back, where would you look at? On a butterfly pattern, you're looking at potentially 3 different Fibonacci. Oh, shoot, I got the wrong tool out there. Let me get the right tool out here. Let's get the retracement tool. You've got basically 3 different retracement levels to take a look at. The dead cat bounce area, the 0.382, and that's going to be somewhere right around, I didn't grab it exactly right, but somewhere right around 429. That'd be your 0.382 retracement. And the 0.618 retracement would be about 332. If it pulls back to 332 and it's trading at 585 marked, you probably won't want to buy it. But that would be one of your buy points. Now, what else do we have for potential buy points for Harmony Gold? That's assuming that it does complete this butterfly sell pattern. Well, the first place where it would pull back to, or the first level of support, would be Stevie's green line. And that price point is 464. Other than 464, the next entry point that I would have for you on a daily basis would be 337 to 314 out there. So you'd really be watching Stevie's green line on a pullback. But Harmony Gold appears to be generating a sell the D point of an A to B equals CD, which really is a butterfly sell pattern out there. On the weekly time frame, I don't have any kind of a topping pattern out there. So watch the daily. And again, folks, I won't be with you tomorrow, so have a terrific Thursday, a fantastic Friday, and I will see you on Marvy Monday. Thanks so much for being here. Have a great weekend. Take care.